Bitcoin's volatile range expansion, consolidation, breakdown, or breakout ahead? That's the question on everybody's mind. And today we are going to try and figure that out. Hey guys, it's Keith Allen. Got the new mic back. And so hopefully got all the audio issues worked out. Hope it sounds good. Hope it sounds better than the previous one. And this is actually what I had originally. I just kind of replaced it with the same model because it sounded good and it seems to sound the best as everything I've had. And I like the mix too. So hope it works for you too. Hope you're having a good day. We've got some volatility. Hey, that's not a surprise, right? We knew that was coming. We had Trump's speech to Congress and the American people last night. Guardrails were up for that. And now the guardrails are, at least one of them is gone. We'll get into that. We're going to discuss a lot today. We're going to discuss key levels to watch in this expanded range to help us kind of figure out whether we're heading towards consolidation, towards a potential breakout, or a potential breakdown. You know, we get to these levels, and the market seems to panic when we get to extremes. And obviously, there's lots of FUD generating around tariffs and the economy and geopolitical situations that aren't new, shouldn't be a surprise to anybody. But that's why the market is uneasy. And of course, we'll also look at fire charts, order book insights, and track liquidity flows and see if that gives us any clues. So we'll even take a look at how things are trending now, what this price action looks like, and the technicals are looking like relative to other times in history to see if, are we indeed, is this just a bottom test and a flush and a shakeout? Or are we indeed developing towards a bear market, right? Like it has to start at some point. Is it now? That and more coming up in this analysis. Before we climb in real quickly, please do me a favor, smash some buttons, hit that like button, hit the share button, bring some people into the community here, right? Let's help us help grow this thing, if you will. Also, live chat is open. Always enjoy engaging with you guys. So by all means, please join me. If you've got questions, if you've got insights, I want to hear from you. And with that, let's go ahead and dive right into this thing. I'm going to start on the candle chart because that's where all the key levels are that we need to be aware of. So let's start here. And as you can see, we've been looking at this chart for a while. I shared one this morning where I created these two little boxes here. The bigger box, this really highlights a range of just a massive amount of technical resistance. Obviously, we have it all the way up here, but this would be marked by our prior support level, right? That we had thought that we had validated a nice RS flip on because we spent so much time up there since the November Trump pump took us out the top of this range. We had a brief consolidation here in this 86 to 91.6 range, and we then broke out and we consolidated really between that and 100K for a long time. We had a couple of fake out breakouts and then came back into this range. But this range was feeling pretty good to me after a few support tests. But then obviously things started to break down. We had the death cross between the 21 and the 50, then the death cross between the 21 and the 100-day moving averages. And now, and this one just like, it's been gliding into this on this glide path. It took a long time, days for this to develop, but finally a death cross between the 50-day and the 100-day moving averages. And that's not what anybody really wants to see. This, to me, indicates continuation of this downward momentum. Yes, these are lagging indicators. And yes, this could be a shallow crossing. Hopefully it is. If you're a bull and you want to see it unwind, which would require some big green candles, kind of like this one, that don't get fully retraced like this one. And you want to see the 21 moving back up, back on an upward trajectory, and that would help unwind these and get us on our way to a reclamation of this bull market and back to price discovery. So a lot has to happen to get there. right? And on the technical side, so here's the key levels where we ran into resistance today. Couldn't even get to that 91.5K range. The 21-day moving average in here and the 2025 top, yearly open. These are levels that we'd like to see picked up and reclaimed this week. We've got some time for that to happen, but this is what I'm watching here. Now, in terms of a breakdown, in my opinion, this was beautiful. I mean, this could have only been better if it was a complete closure on the CME gap, which eludes us. This is again, I'm not a gap trader, but the fact that there's just a little bit of daylight in here, we came this far. Why not close the thing? This gives me a hint of an idea that we may go back down here. But I did, kind of contradicting that would be that we had a retest here that took us to the 200-day moving average, overshot it a bit, but didn't get back down into this range. So is this real? Is this what we're going to see? Are we going to see higher lows here? That would be fine with I think most of the world, but a lot are still waiting for a potential shakeout that could even potentially jeopardize this trend line and go lower. If it goes lower, where would be safe spots to land? I would say this 75, 76K range, which also had some brief consolidation. And why I like this and why the CME gap is even still on anybody's mind is because if we zoom out, we'll see that we have some confluence with the 50-week moving average, which is now moving into position here. Okay, so support tests to that level, 50-week and the trend line have also historically been pretty good. Now, what I don't like, and now this is where we look at the scary part, and I'm going to take the CME thing out because I don't really care at the moment. The scary part is, what if we do lose this level? We then have the 2021 top, which remains, in my opinion, the strongest RS slip zone on the chart. I think this trend line is the strongest place to bounce on this chart. Excuse me, and I'm was happy to pick up some Bitcoin here, but are we going to retest it? And if we do retest it, is it going to hold? Could we go here down to the 75, 76K level, or even all the way down to here? This would, believe it or not, still keep, even though technically the trend here is something that we're all watching. Remember how much this market likes to shake out and fake out people. And so if we do get that overshoot, we could potentially come down here and still be within the range of a normal bull market correction inside 40%. And that still qualifies. Now, secondary to that, and something else that I watched closely, and I shared this with you guys yesterday. Let's see if I can find it again. The weekly moving average, as you can see, I have it marked down here with this line. Historically, anytime this crosses below about this 41 level on the RSI on the weekly, we're headed to bear market territory. So we're currently still above that, obviously trending down, but a rebound from here would be critical to see, in my opinion. So we'll be watching for that as well, depending on where things end up in terms of price action relative to that, and in terms of these other levels relative to that. That's going to kind of paint the whole picture for me. Now, let's look what has happened in previous cycles, because I said, we would look at how price structure aligns with historical bull market trends or breakdowns, right? And so let's look back, and especially I want to look at this death cross, this series of death crosses, especially between the 50 and the 100. The 21 and the 200 are the ones I fear the most. That's the death cross. That's really the final confirmation for me in most scenarios. So, when you see the red 50 and the blue 100 crossing on the daily, that's typically not a good thing, right? Now, in this instance, if we go back to 2021, this marked a mid-cycle top. And this to me is interesting. This could be what we're seeing develop here. Now, this took some time to develop and to bottom out. And it was an ugly correction, mind you. This one went um, over 50%. This one went 56%, which is scary, right? That goes beyond the 40% that we said. So be mindful of that. But we could be in a similar scenario here, right about now, when price is doing just that. Now, this could also be the top. This could have been the mid-cycle top, and this could be the top. Any of these, nothing is off the table, and you kind of have to wait for things to develop and look at it in hindsight and say, okay, this was the mid-cycle top, or oh shit, things broke down from here, and we're done, and this is the mid-cycle top. I still have conviction that this bull market will thrive. We will reclaim it at some point in time, and so I'm still in that camp until we see a breakdown that takes us deeper. Looks like we got a couple comments in the group. Let's see who's here joining us. It is Proud Noob. I don't remember the last time CME gap was getting filled and price decided to shoot up without completing it. I don't either. I'm not a gap trader, so I don't follow this very closely all the time, but is what it is. Are you surprised? Oh, a quote from our Telegram community. By the way, for anybody who has not joined our Telegram community, I encourage you to do so. This quote actually comes from the Premium Plus community, but we've got an free open community. There's about 7,500 traders around the world in it. No moon boys, no shillers, no bullshit. Join us. We're talking about this stuff every single day, pretty much around the clock. And so it's a great place to gain insights and share insights and learn along the way. So yes, I will elaborate on that here in a second. And the great trend line, what 2 points you connect to come up with that. Okay, so let's start there since we're on that chart. The trend line, this one begins for me. I had initially had a line coming from here, which was the macro, and I can show you that too, and show you how I don't typically like to adjust lines, right? But things changed. So if we go back to all the way back to like the FTX crash, November 2022, that was the trajectory that we were on. And somewhere along the way, likely in the political spectrum, things started to change, got more aggressive, right? And so we started to see this. So I adjusted my line because the touch point from here, there's a lot of distance from here and here. And I found more confluence in this trend line, which is why I built that. And to build my trend lines, by the way, I do like to deviate from the candle chart and move to a line chart and find those touch points that way. We eliminate the wicks. We look for the touch points on the line chart. And so that's exactly how I found it, right? We connected down here in September 2023, and we connected to this double bottom here in September 2024. That's a year. And then we see this continuing here. So hope that helps clarify some things for you in that regard. So now in terms of what we have seen beyond this, there are times where this does indeed develop into a bear market, right? And so that's what we're concerned about, and that's what the market is fearful of right now. And that would look something like this, right? We see that breakdown. Now, this was already under the 200-day moving average. That's a difference here. In the current environment, we're not below the 200-day moving average. These are not all crossed up. The crossing is really starting at the top here, as it typically does. And so if we look back in history, other times where we're at the beginning of that crossing, and this, again, that looks a lot like this to me. Similarly, this was a bigger breakdown. Okay. But we had noticed the gap, the distance between the 200 is way down here and here. We were much tighter because we had this dip, we had this consolidation, et cetera, et cetera. Let's look back in history. And guys, I'm doing this live in the fire. So, um, let's see if we can find another one. And if you have any insight to one that you want to share, then by all means. This one was a bit of an anomaly to me because I think that price would have found its footing here. Um, However, we had the COVID crash, so I kind of discount this one here. If we go back a bit further, we have that 2021. Excuse me, this was 2017 top and a full breakdown here. There was a lot of range between the moving averages here, and then things obviously this was the death cross, the final death cross here, when the green 21 crossed the purple 200, and that's what we do not want to see. And that's what we'll be watching for here, right? We're a ways away from that developing here, but we're on that trajectory at the moment, right? Here's the green 21, here's the purple 200. That is not a death cross that you want to see because that typically is kind of your last validation of what's happening. These dips here, these are just kind of signaling or illustrating, I should say, some of the historical big corrections we've had in bull markets. I mean, back in the day, 40%, 75%. I don't think we see a 75% correction anymore. But in this realm, 40% is certainly not out of the realm of possibilities. I know a lot of technicians don't like to see us go below 40%. Neither do I. But here's a glaring example of going 56% and it correcting, with a new all-time high. So that's something we'll be watching for. Again, I'm going to look for something shallower. There's times where we were in the uptrend, and here's a good example of a pretty solid series of death crosses that were concerning. It unwound here, it crossed again briefly, found its bottom, and so that's really what we want to see happen here. We want to see, there could be some more downside here, but ultimately we want to see it find support, find its footing, and start building its way out. All right, so that's what we lack here at the moment. And if we have the structure to do it, right, the question is, are we going to consolidate in this lower end of the range? Are we going to stick to this end? And this is kind of, I think the midway point is somewhere around this 2025 open, according to some of our members in the community. And so this is interesting to me. I think that, as we said on the way up, right, we were always looking for consolidation levels so that there was some friction in the chart when price began to break down. So it was surprising that we broke down through this so easily, right? We tested it many, many times. It seemed solid as a rock and then just free fall through it. And so, we know there was some manipulation. There was tariff talk in here that plummeted things through. And then, hey, we're going to postpone the tariffs. And, and then this one was what, I think there was tariff talk. And then this was, hey, we're going to put a Bitcoin reserve or a crypto reserve with all these other coins. And we got this big rally from that. And then, of course, that completely retraced. We had guardrails up on yesterday's price action because of the Trump speech. And now what's happening here, right? So I talk about these guardrails. We had this and we had up above. Let's see if it shows up any better on the weekly chart. When it first showed up, it was very clear. Okay, so yesterday it kind of began, and we had a rail here on the bottom and a rail here on the top. They were both pretty solid. Price stayed pinned here between, during the entire speech, through the afternoon yesterday and through the speech last night, and then we got this bump up in a block that now grew to like 50 million. Bumped up and pushed price up, but price ran into resistance, and you see this liquidity here runs into really has confluence, rather, I should say, with where we have this strong technical resistance here, right? We have a block of it down here, blocking this 91.5. We have more concentrated around the 2025 top, and then we have another concentration here around these key moving averages. Like it's not even worth talking about getting back above 100K at this point until we establish a range, right? We need to see closes and full candle bodies above these moving averages, right? We'll take what we can get, right? It's going to be in ranges. Let's start with trying to reclaim, this 21-day moving average is very close to this 91.6 level. So we first need to get above this and clear the 21, and then maybe climb our way into this 5100 death cross and try to unwind this, which could either happen in one big giant green celery stick like this, or might take a bit of grinding to get there, work our way back above that, and then we have to establish an RS flip above 100K. It hasn't happened yet. It has, we've spent some time up there. Obviously, you can see it on the daily that we have had, plenty of candles that went above that 100K level. But if we look at it on the weekly, in reality, there have been precisely zero that have lived their entire life, open, close, high, low, whatever you want to call it, above that 100K level, right? There's always been, even the strongest one had a wick below it. And so until we can start printing full candles above this 100K level, we still have a chance of plummeting back down. And so that's what I'm looking for. I want to see consolidation. I want to see us take it level by level and grind our way out. Another flush and a V-shaped recovery out would be fine too. But in short of that, or, if that doesn't happen, and it could be developing here, right? But at the moment, it seems like resistance is really strong. It feels like the market is in the, how should I say, buy the dip, sell the rip mode. And so that's something that we just have to watch. Do you think the rug pull turned into a market buy at all? Price seems to be grinding up. Great question. And let me show you how we tell. Let's go back over to fire charts. As you can see, let's go to the daily because we can hone in on this a bit better. Man, a lot of network congestion today. Let's see. So on the daily, we can see this was 46 million at the time it disappeared. Okay. And we can see some serious price action here right after it was pulled, right? I mean, not simultaneous, but within a few minutes, we saw a lot of buy volume coming in via market orders. CVD is market orders. Up here on fire charts, these are limit orders. What we see in the binge CVD is market orders. And if we switch to absolute CVD, we can actually see the dollar value of these moves. And if we just go to the bottom here, we can see it was at the all orders was at around 30 million net, and one pop went to 73. So that's 44 million of the 46 million that was here. So quite conceivable. It is not a dollar to dollar match, but it is quite conceivable that this was converted into market orders. So that's pretty interesting, and that's why price is moving up from here. So maybe we get another crack at it, but you can see we have ask liquidity stacking up above. So let's zoom out and get some perspective on that. The fact that we're starting to see asks ladder up higher is an indication that there's some sentiment that price is going to go back there. What we need to see to make that happen is more of the bids starting to push up as well. Okay, so this is what we're watching on fire charts. We're watching to see, just as we saw this area develop and we saw some liquidity come in here. We saw how price reacted to that, and we saw how price reacted to this stair stepping up. We need to be looking for exactly the same thing to happen here. And we're looking also to see how the resistance levels are developing. Are they eroding? Are they strengthening? And here you can see both with the colors visually and with the tag tool, we can see it started at 47 million. It went up to 48.7 million, and now it's at 51 million. So that's growing a little bit there, and that is going to make it harder to penetrate. We'll see what happens as price approaches, because when price gets close, they may pull some of it or all of it or move it. So be mindful of that. On this near range level, it looks like it started at 30, went to 32, 33, 34, 35, and it's now at 35 million. None of these levels are unpenetrable, but they are historically enough to hold price until price is ready to do its thing, right? Like there's no number, there's no value on this chart that we could say is impenetrable. Because if we look at history, we can see throughout history that there are times when price breaks through it, right? Whatever's there. This was 200 million and price went through it. And so when the market is ready for that move can happen. But we can get a gauge on sentiment by and the likelihood of that happening by watching this liquidity and seeing whether it is moving, seeing whether it is building, seeing whether it is fading. And so resistance remains very strong up here. But again, I'm in the camp that we are still, because the structure is intact, even though we have strong overhead resistance, we do have some opportunity to continue this bull run, and I will believe that until I see a bigger breakdown. Certainly, I won't even speculate on being in a bear market without breaking this trend line, and even then, I will again look to this final level as kind of my line in the sand, and the weekly RSI as my lines in the sand, especially these two together. If we have confluence between that, then that could really be interesting. And you know what? Later this week, I think tomorrow, as a matter of fact, I'm going to do a live stream with the trading parrot. Mariano and I used to do these pretty regularly. I haven't spoken with him in a while, so I'm looking forward to that. And he is an expert on RSI, so maybe he can shed some light as to what price level that would be from here, if RSI is to indeed go that low. And with that, guys, I'm going to leave you with a parting shot of the order book here on Fire Charts. Happy to see some buying happen here, but just be mindful of the fact that unless we see more bids coming in to challenge this up here, the brighter side, the side with the most volume, typically wins these battles here. So we're heavy up here, we're light down here, we've got strength down around the trend line, and actually, I think that's closer even to the we've got strength between the 200-day moving average as well, right? So between here and the trend line, that was around 80K is where I saw that block building, right? Let's just double check that. Yeah. So there you have it. Let's see what happens from here, guys. Hope that helps you out and gives you some insight. Again, if you appreciate these streams, do me a favor and smash the buttons. Definitely make sure you hit the subscribe so you don't miss any of them in the future. And if you like it, do me a favor and share it with somebody so that we can grow the channel. And if you're interested in any of the tools, you'll find links to them in the description of the video down below. You can always head over to materialindicators.com to get it straight. We'll see you again tomorrow. Have a good one.